Today's session. Time now for the closing countdown. Let's trade the close. Mike Lewis, head of Barclays U.S. equity cash trading, joins us now. What do you see in terms of this bounce? So we were down more than 600 negative for the week last week, fourth week in a row. How do you read into the action today in that context?
Yeah, hey guys. Clearly we've been stuck in a range, and it's kind of bouncing back and forth with the different headlines that we're getting on trade. I think that the difference between where we are now and where we were 2 or 3 weeks ago when we were at 3,000 is expectations. People at the highs were expecting a super dovish Fed and global central banks cumulatively, and positioning was very full. CTAs, risk parity, vol target funds were all very, very full, as were traditional investors. Now, when we're only 150 points lower from there, you've got positioning has been cleaned out. Protection is running very high. And we're at month end. And at month end, when you've had this disparity between bond prices and equities, you're probably going to see a decent amount of equities to buy for pension fund rebalancing, which is a thing that happens at the end of every month. So for this bounce today, I just think we're at the lower end of a range. Positioning has been cleaned out. People have sold. People are hedged up. Volumes are super, super low. And when people come back in September, against the backdrop of somewhat better headlines from the trade data, it seems that we could bounce back towards that 2,900 level, but it really is going to be incumbent upon the Fed and what they do in September. That's really where people are going to be looking to next.
You think this volatility, or as some say, chaotic environment is going to exist for the near future?
Yeah, yes and no. I think that we're going to move sideways, which was what I said the last time I was on about 2 weeks ago. I didn't expect it to be this volatile, but I think volatility will subside as the systematic positioning has really been reduced. And, not to get into that too much because it's probably a different listener base for that. But I think some of the volatility will probably be removed from the marketplace in the near term. The next really volatile event will be the Fed in September on whether it's 25 or 50 or nothing.
So talk to me a little bit about month-end volatility, because we're coming up to the end of August. Traditionally a bad month for stocks. September's not a great month for stocks either, but how do you see some of the rebalancing and positioning given the outperformance of bonds versus stocks, for instance, and other things we've seen this month?
Yeah, I mean, I'm not going to get into numbers. I don't have the exact numbers, but typically when you see this type of underperformance from equities, you'll see the pension funds rebalance over the course of a number of days from month end into even sometimes the beginning of the next month. It could be equity positive event to the tune of a couple $2 billion for sure.
Mike, appreciate it. We'll talk to you soon. That's Mike Lewis joining us.